after the audit risk assessment under the auditing, now we are moving to the audit planning part. That means after the risk assessment process has been done for a particular audit of financial statement, now we are focusing how we can do the planning of the particular audit before we start the audit, right? So SLAUS 300, planning and audit of financial statements, will guide us how we can do an audit planning before we starting an audit, right? So through this standard, you can learn what are the important aspects of planning, right? So why it is important an auditor to plan the audit, why it is important, right? This may be sometime a particularly questionable area. Why it is important an auditor to have plan a particular financial statement audit, right? So why the audit planning is important? It says it helps auditor to devote appropriate attention to important areas of the audit. Some audit, sometime for a particular audits, depend on the industry, depend on the different industries where the entity running their business, risk approach or areas with risks may be changed from one audit to another audit. For some particular organization, revenue may be a critical point. Some organization, cash may be a critical point to pay more attention by the auditor, right? Likewise, when you have a particular plan, you can appropriately pay your attention over the important areas of particular audit, right? So that is one thing that you want to keep in mind, why the audit planning is important, because it says you can make your attention on the important areas. Second one, auditors identify and resolve potential problem on a timely basis, right? When he has a particular plan, he should have a plan, right, how to identify particular areas relating to this particular audit and what sort of solutions that they can adopt to solve that kind of a problems, right? That also another advantage of having audit planning, right? Third one, the auditor properly organize and manage the audit so it is performed in an effective manner. So when you plan an audit, particular audit, right, that's a usual thing, right? You can understand easily when you plan something, you can easily, effectively perform the activities what you are expecting to perform, right? And next one, assist in selection of appropriate team members and assignment of the work, right? When you have a particular plan, you can identify. Now say for an example, if you're going to start a bank audit, which will be a very critical area, right? In that case, when you're planning the audit, you identify in the bank audit, you have different sections or different areas of the financial statement to be audited. Based on that, you can decide to whom I am going to allocate this area, to whom I am going to allocate the other areas, right? To do that, you should have a proper audit plan. And the next thing is, it gives a direction, it facilitates, when you have a particular audit plan, it facilitates supervision and review of the works as well, because you know at what point you are going to start the reviews, and what point you have to arrange your supervision over the audit, and which time you want to do the final review, right? Likewise, you can have particular time frame, right, when you have an audit plan, and assist on coordination of work done by the auditors of the components and the expectation. Sometimes when we are doing the audit, say for an example, if we are doing a group audit, group has subsidiaries, or in audit terms we call components, right? In auditing we call them component. Now in accounting we call, if particular if company A has acquired company B, you call company A as the parent and company B as the subsidiary company. So total when you're taking, you call it a group. Now in auditing, we call parent company and not subsidiary, we call it a component. Especially when you have audit client where it has different few components for it, or few subsidiary companies for that particular group. Sometimes maybe other subsidiary companies are not audited by your audit firm. In that case, the auditor who does the group audit or the final audit need to communicate important aspects or important things relating to the other components audits also. So to have that, he should have a better plan, because at what time, now say for an example, if a particular group has 2 subsidiaries, right? So before you complete your group audit, you have to complete the subsidiary audits. Then you want to communicate with subsidiary auditors when they are going to start, depending on the client's requirement, and accordingly you want to have a master plan to your final audit. Or sometimes there may be instances you get some expertise work. Now say for an example, assume that you are doing an audit in a we'll say a company who's selling gem jewelry, right? In that case, to validate the gem and jewelry, you may not having expertise knowledge in your firm, right? Because you are an accounting firm, you are an audit firm, you don't have any specialists who are having the capacity, or who may have the expertise over the gem validation. In that case, sometimes you may have to outsource, right? So when you get the outsource service, you need to pre-negotiate with those outsource parties and make ready them to do the required audit works when you do your audit. So in that case, you want to have some sort of a plan with the other parties. So that's why it is important to have these audit planning to an auditor, right? So when you look at a structured approach, what we are using for this audit planning, we call it a structured approach. You can put them into, like, say, 4 main categories. One we call first step, right? You can put it as like 4 steps in basically, right? In audit plan, you can put into the basically 4 steps, right? Step 1, ensure the ethical requirements are met, including the independence. I think we discussed about this in the class, right? What do you mean by the ethical requirement and what do you mean by independence? Those things we discussed. So first of all, you want to see whether before we starting this audit, are we comply with all the ethical requirements implemented by CA Sri Lanka, and are we applying, or are we having independence to do this particular audit, right? The second thing, you want to ensure the terms of the engagement are understood, because now we discussed about terms of the engagement, or we discussed about the engagement letter, why we issuing an engagement letter to our audit client, what is the importance, and what are the things that we communicate through a engagement letter to the client, right? So you should ensure that your client is aware about terms and conditions of the engagement what we are going to do. Most of the engagement we have, we call there is a expectation gap, because sometimes the client thinks that we do 100% checkings over all the transactions, but that is not the case. We perform our audit procedures based on the sample basis, so which we need to communicate that fact in advance to our client. Then only he acknowledge, okay, you can go do this audit on the sample basis. If he wanted to do something on like 100% basis, that even we need to agree. Sometimes we may have to charge a higher fee, since we are expecting to spend a lot of time to do that particular audit, right? And simply we need to communicate that, right? And also very important thing, that is the framework, accounting framework where the client has prepared its financial statement, that you need to communicate with the client, right? Because sometimes client may use inappropriate accounting framework, right? In that case, we need to communicate those kind of facts. So those kind of things we can communicate through the engagement letter. So you need to ensure the terms and the engagement are understand with your client, right? Okay. Then next one is establishing overall audit strategy, right? The third step is you want to establish an audit overall strategy. Normally, when we are, like, say for an example, if assume that we go for a 6-a-side match or a 6-a-side cricket tournament, right? When you go to that 6-a-side cricket tournament, right, depending on the pitch quality, depending on the skills of your opponent or the team that you are playing with, right? So you want to have your own strategy for your team, isn't it? Right? Before we start the match, 6 of us all together, we discuss each other what to do, who is going to put the fast baller, who is going to do the spring balls, right? Who is going to bat first, and everything. You need to have your own strategy against your the other teams, because you want to win the match, right? Likewise, when we are going to start an audit event, we should have our audit strategy. How are we going to do that? Because sometimes it may be a client with lot of frauds. The client's environment or the client's management may involve, or the top management of the client may be the team of people not with the integrity, right? They are people, those who have involved with lot of fraudulent activities, which is very popular among the society. So if you are going to do an audit for that sort of a client, you want to ensure that you are applying the correct strategy to do the audit for this particular client. In that case, you should have an audit strategy, what you're going to do under this audit. And next thing is, the finally important thing is, when you have audit strategy, then you should have a particular audit plan to launch whatever the activities you're planning to do at your audit, right? That means you should have a detailed strategy. First you had a strategy, now you should have a detailed strategy or the detailed plan. As I told you, right, when you go and start the when we're trying to play, I mean our team is trying to play at the 6-a-side match, as the team leader, you decide who is going to bowl first, who is going to bat first, right? And everything will be detailedly planned, and then you can apply that particular plan to achieve your target or win the match, right? Likewise, when you're doing the audit also, you should have a strategy as well as you should have an audit plan, right? So then we'll focus on what is this the overall audit strategy and audit plan. So that's what we are going to cover under this particular tutorial, right? So what is audit strategy and what is audit plan? Remember, right, like what we do for the other the activities on the day-to-day life, for do the audit also we should have a audit strategy as well. We should have a detailed audit plan also, right? Okay, so first we'll look at what is this audit strategy. Now what happen is in audit strategy, through the audit strategy, it sets the scope, time and the direction of the audit, right? It sets the scope time. That scope time in the sense, like say for an example, simply our audit strategy is to give true and fair view. This is our scope in the sense, we take the financial statement and we're going to tell the financial statement are in agreement with the requirement of the particular accounting framework, or we'll say we are going to tell the financial statement are in accordance with Sri Lanka accounting standards. So that is our scope. So that's what we are going to do. So time in the sense, we should know we should agree with the client on which time, right? What sort of a time that we are going to spend, right? What sort of a time that how much of a time that we are going to spend to complete this audit, and also in what directions, how we direct our team to achieve this target, right? That is our short term plan, right? Short term strategy, strategy I would say, the strategy, right? So when you are determining, when you are having this audit strategy, then it is guiding you to develop a more detailed audit plan. So assume that we are going to do say we are going to do an audit in a bank, right? That is our scope. So we want to tell what are the we want to tell to the stakeholders that this financial statement has prepared in accordance with Sri Lanka accounting standard. That is our scope. That's what we're going to do, and we're going to give you this. Now say for an example, in if it is a bank, the central bank has a rule. Now if normally banks year end will be 31st December in Sri Lanka, most of the banks, right, almost all the banks year end is 31st December. So all the banks have to prepare their financial statement and publish within a stipulated time period, like say before 31st March they need to publish the financial statement. 3-month period is given by the central bank. In that case, they wanted to publish within that period. So within that particular time period, you want to play the game and you want to finish the audit by issuing the audit report. So that is the time that you have, and direction, how our team is directing to achieve this, right? So you should have a audit strategy, how we are going to do this, right? How we achieve this target. That strategy has to be there, because through that you can develop it into a more detailed audit plan, right? Okay, so when we are deciding this overall audit strategy, the auditor may consider these factors, right? When it determining this the audit strategy. So these are important points in your examination. What are the things that the auditor have to be determined, or have to be concerned when the auditor is establishing this overall audit strategy, right? So mainly it has divided into different factors. The first factor, it says you want to look at the characteristic of an engagement, because now say for an example, as we took as an example, we are going to do an audit of a bank, right? Assume you are asked to do audit of a small private limited company, right? So assume that who is in the manufacturing sector, right? Now when you're comparing financial statement audit in a bank versus financial statement audit in a small manufacturing company, that is two different things. Depending on those two audits, your audit strategy also should be changed, right? That's what it says, characteristics of the engagement, what you have to focus, right? So under that, what you want to look at, the financial reporting framework. If any entity is doing or preparing financial statement using Sri Lanka accounting standards, and if some entity is preparing financial statement using Sri Lanka accounting standard for small entities, or else Sri Lanka accounting standard for small and medium sized entities, right? What you want to concern, depending on that requirements, right, depending on the framework what they are using, you may have to apply different audit approach, isn't it? Because the way that it tells in the full SLFRSs, right, or Sri Lanka accounting standards are not equal what it tells in the Sri Lanka accounting standard for small and medium sized entities. It's simplified. So in that case, when you're doing an audit in a SME sector, SME client, you may not worry so much about the complexity of the accounting standard, because it's simply than the full SLFRSs, right? Likewise, when you determining when you deciding, or when you have setting your audit strategy, you want to look at what sort of a financial reporting framework the client is using, and industry specific reporting requirement. That's what I told, right? When we are doing particularly say a bank audit, right, central bank requirement is there, right? Sometime now, say for an example, a finance company, if it is a finance company, central bank requirement. Other than that, it has the SEC requirement also, right? Securities and Exchange Commission, or we call the Colombo Stock Exchange requirement, is also there, right? Now, and when we look at a private limited company, there is no such requirement is adopted, right? Okay. Next one, expected audit coverage. What sort of audit coverage that has to be done? Say simply, you can take the audit coverage in the sense, say for an example, it's not like now say if it is a finance company, if it is a bank, right, you may have to go for all the branches around the Sri Lanka or in the country. Sometimes you may have to go, you have to cover a sample of the branch network. Likewise, how much the expected, we call the expected audit coverage, up to what extent we need to cover that particularly. And nature of the business segments, you want to look at if there's any business segments. Now we call if one entity, now say for an example a multinational companies, right? If you take like multinational companies or a conglomerate organization like June Keels Holdings, right? It has lots of different segments. John Keels, they are into hotel industry, they are into the say FMGC categories, right? FMCG's category. So likewise, they have different segments. Depend on that, you want to determine how you perform the audit, right? And next one is availability of the internal audit works. For some audits, right, for some clients, they have a different internal auditors also, right? Now say for an example, if when there's a say for an example a bank, right? Banks is external audit is doing by the X audit firm, internal audit is doing by Y audit firm. When X audit firm is doing their external audit, they can use the work performed by the Y, right? Y internal auditors, the accounting work papers can be used as an evidence by X, right? Depending on that, your work will be little bit low. I'm not telling that exactly we are going to depend on those, but in particular area, we are depending on the work performed by the internal auditor. So depending on that, your audit strategy is going to be changed, right? That's what it says, availability of the internal auditor. Then next one, use of the service organization. It's like service organization. Assume that when we are going to do our audit client's payroll has outsourced to another company, right? In that case, we want to use their works also. So if circumstances like that, you may have to have a different strategy to perform your audit. Otherwise, now say for an example, our audit client's company's salary is paying by another service organization. In that case, we want to look at the salary expense. When we're checking the salary expenses, the client will say, no, we are not the one who is handling the salary. You have to you have to go and meet this company people to get our salary details. So in that case, the auditor have to determine a strategy for that, right? So you want to look at that facts as well. Effects of information technology on the audit procedures. Let's understand, right? So how whether your audit client is IT based client in the sense whether they record all the transaction based on a IT system like ERP system, right? And next one is availability of the client personnel and the data, how we can access to their data, right? Those kind of things you want to consider when you're determining this audit strategy. That is in the case of the nature of the engagement, right, or the characteristics of the engagement. Then you can see another important aspects when you determine the audit strategy. You want to look at this thing as well, reporting objective, time of the audit, and the nature of the communications, right? That means what are the reporting objectives, to whom we need to report. Now say for an example, if we are doing audit in a bank or a finance company, normally since the public money is held by those organizations, we need to communicate those whether the financial statement have prepared true and fair view to all the stakeholders, because especially bank and finance companies are accepting public money deposits. In that case, they have public money with them. So you have a reporting objective. To them, you need to report, right? As a company, they need to report. So you're going to give them the audit opinion on their financial statement, because ultimately number of stakeholders are using your report. So that is your reporting objective. That is their reporting objective. Why they want to do this? A public limited company, for the people, or for the sake of public, you need to report, right? And we'll see what are the things that we want to consider under this the reporting objective timings. And entities timetable for reporting. That's what I told, right? So say for an example, if it is a finance company, normally in Sri Lankan context, lots of finance companies financial year is end on 31st March. So in that case, before 30th June, they need to done their financial statement, prepare and send to the central bank. A copy had to be sent to the central bank, right? So in that case, they have a reporting period. They want to finish the auditing. Most of the finance companies, right, when they have their financial year end on 31st March, they need to do and complete the audit on or before 30th June, right, of the particular year. Then they can because that is a reporting requirement applicable for this. Now say for an example, if it is a private limited company, even the management or the board of directors may require you to complete the audit in a particular day, irrespective whether there is a regulatory requirement, right? Now say all the private limited companies are required to send their annual return or to the registrar of companies on or before 30th September. So all the companies are agreeing with us, before 30th September we need to do the audit, or else there are some audit clients, they need to finish it the audit on or before 30th November, that is to submit the annual tax return to the Department of Inland Revenue, right? By the time they submit their tax computation, along with the tax computation or along with the tax return, they need to submit audited financial statement, right? For that purpose, the auditors, they may ask, now say for an example, if some client has not prepared its financial statement until the last moment, and he comes on somewhere in September or October 1st and say he wanted to finish this by no before 30th November, right? Because he wanted to submit financial statement to the Department of Inland Revenue. For that purpose, he is coming with a timetable. Yeah, see, I want to quickly do this audit, right? Okay, that's why the audit strategy is important sometimes. Now say for an example, some clients comes at the end of, like say mid of November they come and ask, within 1 week they ask the audit report. In that case, what sort of audit strategy that we need to be applied is very critical, right? That's why the audit strategy is very important. So entities timetable for reporting is one important such aspect. Next one is organization of meeting with the management and those charged with the governance. Normally, especially for the PLC companies, they should have a planning audit meeting with those charged with the governance. Those charged with the governance in the sense, now say for an example, if you're taking a company, PLC or company, right, PLC organization, PLC, right, public limited company, if you're taking that, those public limited companies audit function is running by separate team, consist of the board, we call them audit committee, right? Now normally a company has a board of directors. No? Out of these board of directors, there are different kind of committees, right, which consist 3-4 directors out of the total board of directors of the company. One we call Remuneration Committee. That means that committee decide the remuneration of the employees of the company. Then there's another committee called Nomination Committee. That means if there is any director leaves the organization, right, or resign from the organization, a Nomination Committee is the committee who take the responsibility to nominate a new director to the company, or else if company CFO or company's we'll say CEO, right? Appointing him is responsibility of nomination committee. Likewise, there are different committees. Very important committee, we call it audit committee. What happen in an audit committee, all the accounting function, all the audit function of the company is overlooked by this audit committee. What happen is that audit committee people are having an audit committee meeting before we start the audit with the auditors. That audit committee meeting, we call them those charged with governance, right? Governance, those are the people, those who govern the company. What they do, they come and have a meeting with the external auditors and ask what is your audit strategy, what you are going to do, when you are going to give us the audit report, and everything is communicated on that. In that meeting, the auditor also can express, audit also can give his view over the audit, when we can start, what are the documents that we required, everything we need to pre-communicate with the those charged with governance, right? That is required when we're having this audit strategy, right? Next one, discussion with management and those charged with the governance, as I explained, and expected communication with the third parties. If we want to have some communication with the third parties, now say for an example, assume that we do the valuation, we will do a valuation particular. Now the instance where we do the valuation is for the employee benefit, right? We do and calculate, you may learn under LKS 19 employee benefit actuarial valuation. So actuarial valuation report is running by or doing by a person called actuarial valuer. If we want to have a discussion with them, we need to discuss with the actuarial valuer, right, about the actuarial valuation report, how you calculate and what are the assumptions that you make, and everything we can communicate with them. So that the information is required when we do the audit strategy, right? Okay, another aspect why we need to have the audit strategy is significant factors, preliminary engagement activities, and knowledge gain on the other engagements, right? These information are also very important when we are going to set a audit strategy, right? Okay, so we have discussed about this determination of materiality, right? On what basis we determine, are we taking revenue, or are we taking profit before tax, or are we taking assets of the company to determine the materiality, right? Determination of materiality is very important to have an audit strategy. Areas identified with high risk of the material misstatement, which we discussed in the previous section, right? What are the high risk of material misstatement areas, right? That is very important when you are determining an audit strategy. Result of previous audits, right? You want to communicate with your team what happened in the previous year for this particular audit client, what are the concerns that the audit partner has, right, over the last years. Those kind of things are important when we're having audit strategy. Then need to maintain professional skepticism, right? Evidence of management commitment and design implementation and maintenance of the sound internal control, right? We want to look at how management committed. Some people, in experience, right? Experientially, when you do an audit, there are some audit clients, they are very committed, they are very helpful to complete the statutory audit in a standard level. They are very helpful, they are very coordinative people. They like to do the audit in accordance with the auditing standards, perfect audit. And also there are some clients, they are not like to do the audit at all. They are not helping, they are not committing anything, right? So those kind of factors you want to determine when you are having to have the audit strategy. Then, say for an example, if we want to do an audit, that audit is not giving any sort of information, basically what you can do, go for the audit board of directors meeting and tell, these are the information that we need, right? Now say for an example, assume that if you are going to do an audit in a small family owned private limited company where the accountant is refusing to give the financial information, right? What you can do, ask that particular say the accountant and board of directors to come to one place, right? Or the the board meeting, right? And you can discuss, see, last time when I'm doing the audit, these were the reason why I couldn't complete my audit on time, because the auditors or we were not provided the adequate information on time. So that was the reason. So these are the information that we need in order to complete the audit, according to the time period or the deadline that you are requiring. Likewise, you can communicate. To have that, you should have the prior year knowledge, right? Okay, so what it say, whether the client is committed client, and how how the company's internal controls, how effective everything have to be known, right? And volume of transaction, you want to see now, say for an example, if you're going to do a manufacturing company audit versus if you're going to do a bank audit, the revenue is bank has a large number of transactions, so depending on that you want to use your audit strategy change, right? And significant business developments, you want to see what are the significant business development. Are they acquire new companies during the period, and what are the new business lines they have added to their business, right? Now last time they did only the hotel, now this time they are into the transport business also, right? Likewise, you want to see, and what are the significant industry development, what are the industry development happen, right? And significant change in the financial reporting framework and other significant recent developments. So you want to concern those factors as well. Finally, you want to look at the nature, time and extent of the resources that you have, right? Selection of the engagement team, because assume that if you are going to do particularly a bank audit, you should have very experienced staff with you to do the audit, because the simply very junior people, they can't do the bank in audit simply. So in that case, you want to have sort of very experienced the team of people, those who can use professional judgment, professional skepticism properly, right? So that is a fact that you want to determine when you set your audit strategy, and assign into work to the team members, right? How you're going to, which area allocate to which person, right? That is important. And the engagement budgeting, right? How you're going to budget the engagement, because when senior people are more involved into the audit, your audit fees also have to be increased, right? When the involvement of your audit manager, director, partners involvement, right? When it increases, you want to, now say for an example, if you're going to do a private limited company, the audit manager would have the enough experience to handle that particular audit. But when a particular audit manager completing or doing the audit in a bank, he may need a lot of assistance from his senior staff, or maybe from the partner, maybe from the director. He need to have some assistance to do that, because they also, the scope of the audit is a little bit of complicated. So in that case, the higher involvement of the higher levels may be required. In that case, you know that budgeting also going to be increased, because the partner involvement, the director's involvement, management involvement is so high. So in that case, you have to have the pricings or the budgeting or the engagement budgeting as well. You want to concern, right? Or may have to charge a higher audit fee sometime, right? Okay, so these are the factors that you want to determine when you are setting up a audit strategy, right? Remember, few of these factors, sometime it may be tested at your examination. What are the factors that you need to concern or need to keep in mind or need to know when you are setting up an audit strategy for the particular audit that you are going to do, right? Okay, so next we move to the audit plan. Okay, now we discussed about the audit strategy. What we discussed under the audit strategies, in the sense that is the overall direction, overall plan, overall not plan, I would say overall aim of the audit. Now you are going to put that aim into a detailed plan, which comes under the audit plan, right? Audit plan converts the audit strategy into more detailed plan, includes the nature, time and the audit procedures to be performed by the engagement team members over obtain sufficient and the appropriate audit evidence, right? Now when we're doing the audit, most of the time you may understand, you can learn a word called, you need to gather sufficient and appropriate audit evidence. Two things, you want to gather sufficient audit evidence, that is one thing, sufficient audit evidence. The other one we call appropriate audit evidence. You may gather audit evidence, but those are not appropriate for your the audit. So in that case, even though you have gathered a lot of audit evidence, if it is not appropriate, right, that may be not help you to tell true and fair view of the financial statements, right. In that case, you need to collect sufficient and appropriate audit evidence, right. So what happened in audit plan, you convert your audit strategy into more detailed plan and include nature, time and extent of the audit procedures to be performed by engagement team members and obtain sufficient and appropriate audit evidence. Why? You want to reduce the audit risk. I think we discussed about the audit risk. What is audit risk? Can you remember what is the audit risk? Audit risk is what? Risk of expressing an inappropriate audit opinion when the financial statements are materially misstated, right. So you want to mitigate that risk. In order to do that, you should have a proper plan, you should have a detailed plan how to do this area, what are the things that you want to check out of this area, right. That has to be communicated, right. Okay, so you can see what are the things normally included in the audit plan. It includes the description of nature, time and extent of the plan, risk assessment procedures, right. You the audit plan should include the risk assessment procedures, what we did in the previously, right. What are the risky areas that has to be included in audit plan, right. The second thing, description of nature, time, extent of the plan, further audit procedures. Now here we talk about this, earlier we talk about this, the timing and extent of the plan, risk assessment procedures. The second, we should have nature, time and extent of the plan, further audit procedure at assertion levels, right. At assertion level, what are the further audit procedures that it's required, that we discussed under the, that we want to include under the audit plan, right. That means the description of the nature, time and extent of plan, further audit procedures. What are the further audit procedures that you need to plan? We learn about that little bit in detail, right. And third one, other plan procedures that require to carry out the engagement to comply with the SLUSS. So basically you should include in your audit plan three things. What are the nature, time and extent of the plan, risk assessment procedures. What are the risk assessment procedures that we're going to do, how we're going to do, and up to what extent we're going to do. And second thing is other audit procedures that we need to do, and the second thing is what are the nature, time and extent of the plan, further audit procedures. And third, we call what are the other audit procedures required to carried out to when we performing this audit engagement. So those are the things normally we included in the detailed audit plan, right. Okay, so the planning for these procedures occurs over the course of the audit as the plan develops, right. When we're doing even the audit, we develop our audit plan. Example of item included in the audit plan may be timetable for the plan audit week, when to start the audit, and when we are going to do the review, planning reviews, when we are going to do the substantive procedures, and when we are going to do the final reviews, right. Everything we need to have a timetable when we start the audit and when we are going to issue them the financial statement, right. Up to that they should have a time plan. And allocation of the work to the audit team members, to whom we allocate what areas, right. That is a part of audit plan. And audit procedures for each major accounts areas like inventories, receivable, cash, sales, property, plant and equipment. Likewise, for each area, what are the detailed procedure that your team have to be performed. Materiality for the financial statement as a whole and the performance materiality that we need to include, right. Okay, So those are the normal general things that we included in a detailed audit plan, right? Okay. Other than the annual audit or the external audit or the year-end audit that auditor does, right, we do interim audits also. What do you mean by interim audits? Interim audit in the sense, now say for an example, assume that we do a finance company audit on 31st March, which is the annual audit, right? On 3 months or we call on the quarterly basis also, we can do sort of audit for them. We call them, it is not a full financial statement audit, we call it what? A review of financial statement, right? Review of financial statement, or we call interim audits. It's not internal audit, we call it interim audit. Internal audit is separate thing, it's a different kind of an audit. The scope and everything is changed or the different from external audit. But here we are talking about interim audit. That means other than the annual audit, maybe on 6 months we do an audit, or maybe once in 3 months we do sort of an audit, right? That is doing, which is very important. Why? Now, say for an example, if we are doing an audit in a bank, you may have to check lots of things when you do the bank audit. Sometime, now as I told you, central bank says if your bank's financial year end is 31st, mostly the 31st December will be the financial year end for banks. When your year end is 31st December, you need to prepare the audited financial statement and publish them on or before 31st March. That means central bank has given you 3 months period of time to publish your audit financial statement, financial statement, or we call the audited to publish the audited financial statement. They are giving 3 months period of time. So what happened if they ask you to do the audit the 31st December? No, so on the 31st December they can't give you the financial statement. No, they are also taking like 1-2 weeks to prepare the financial statement in accordance with all the required financial statement adjustment as per the standards. At least they are also, that's practical. Now they also have to pass journal entries, and they also want to prepare the disclosures and everything, and they want to give us the draft financial statement to start the audit. Sort of a complete set of financial statement is required. But what happens is, if it is given to the auditors and ask them to do the audit within 2 months of time, if they ask to complete the audit in 2 months period of time, what happen? Do you believe that you can complete the audit? Bank audit with 2 months period of time? That may not be enough. You may not be able to gather sufficient appropriate audit evidence to tell that your financial statement are true and fair view, isn't it? Right? In that case, we have to use the interim audits also. That's what I told. Interim audit is very important. That means throughout the year you do the audit on the audit client, right? Isn't it? Then at the end of the year, nothing to be worried, because say if you start the audit, assume that your financial year end on 31st March, then your annual or the financial year starts on 1st January, the 1st April. So you do the audit for the first quarter, which is from 1st April to 30th June. For that 3 months you do an audit and give the report. That means you have gathered enough evidence for that 3 months. Then you do the audit for the next 3 months. That means for the next 3 months even you have gathered the audit evidence. Likewise, you gather the audit evidence over the period of time. It is easy for you to do the final audit. When you do the final 3 months audit, that is also looks like a 3-month audit. Understood, right? That's why we do the interim audits. But I would say that the sampling and everything is reconsidered when you do the final audit. But most of the areas or most of the parts required at the external audit can be covered through lots of interim audit. So this table gives you what we normally focus on interim audits and what you have to focus on the final audit procedures, right? What normally the interim audit procedures include and what are the things included in final audits. So see what it's included in the interim audit, right? Inherent risk assessment and gaining an understanding of the entity. So this is happen in the final audit also, but basically we do that in the interim audits also. Recording the entity system of internal controls. Normally when we do in the internal audits, interim audits, we do recorded all the internal controls, right, in the entity. Next one is evaluating the design of material controls, sorry, internal controls, right? You're evaluating the design, whether that design or whether it has designed properly and to prevent, detect or correct the material misstatement, whether they have designed the internal control properly. So that is we normally checks in interim audit procedures. Carrying out test of controls on the company's internal control to ensure they are operating as expected, right? Normally you can do the TOEs during the interim audits. TOEs, whether internal controls are properly happening, right? That can be done. Next one, perform substantive testing of transaction on the balances to gain evidence that books and the records are reliably basis to preparation of the financial statement. So you can do sort of a substantive testings also. You can calculate the depreciation and see whether they correctly recognize the depreciation in the financial statement. If it is interest income, whether they recognize the interest income for the correct period, that you can check, right? Next one, identification of issues that may have an impact of work to workplace at the final audits, right? So what you can concern, what are the areas that you need to focus, right? And which you need to concern when you're doing the audit, final audit or the final audit, year-end audit, right? So that also can be identified. So those are the audit procedures that we do in the interim audits. What happened in the final audit procedures? What it's included in the final audit procedures when you're comparing the audit procedures in the internal period or the interim periods, right? So here, substantive procedures involving verification of statement of financial position, balance and amount in the statement of profit or loss. Basically what happened, not like this control testing, we basically look at the substantive procedures in the annual audits or the final audit, right? And obtaining third party confirmation. Normally for these interim audit we are not calling confirmation from third parties, at least for the banks even we are not talking, we are not gathering or obtaining the third party confirmation, but which is not the case for the final audit. You have to, right? Then analytical procedures relating to the figures in the financial statement. Sometimes you may have to do analytical procedures, right? And subsequent events reviews also we are doing. That means assume that you have trade receivable balance at the balance sheet date. You are checking whether this trade receivable balance has been received by the company subsequently. That subsequent testing is doing at the annual audits, but not in basically in the interim audits. Agreeing the financial statement to the accounts records. Normally we do that at the end of the period. We are checking the closing balance, whether the closing balances are included in the audited financial statement, right? Financial statement. And examining adjustment made during the process of preparing the financial statement. If management has passed any sort of the journal entries, you are checking whether those journal entries are okay, whether they have calculated correctly, whether they have properly recorded in the financial statement. Those are checking, right? And especially at the annual audit we are checking whether the going concern status of the entity is okay, right? We are checking going concern is correct or whether they have predicted correctly, right? And performing tests to ensure that the conclusion formed at the interim audit are still valid, right? Whatever the conclusions that we formed at the interim audits. Now say for an example, if we suspect any area in the interim period that you need to focus more on at the end of the audit, at the time we do the external or the final audit, right? So here the place where you can double check whether the predictions that we did discussed or the what you call conclusions that we formed at the interim period is okay. Now can we come to the conclusion saying that there is no any material misstatement that you can do, right? And especially we are taking represent letters, or we call it representation letters from the clients. That is also doing at the external audits. You can learn about this the written representation a little bit in detail, because there is a different part to cover that part as well, right? So the next topic is also very easy, right? Impact of the interim audit working relating to the internal control of the audit, because as we discussed earlier, that when we're doing the interims audit, mostly we are checking their internal controls, whether the controls are effectively operating during the interim periods that we normally check under this area. So that you can check. So why it is important for you to have this interim audit work for the final audit? We'll just read. This is very simple thing, right? If the auditors are to place reliance on internal controls, they must obtain evidence that the control have been properly effectively throughout the period. Now normally, as I told you, now when we're doing the audit, as I told, like when you're doing very small company audit, say for an example, you do very small private limited company audit, you're not worried about the controls. Normally for small companies, we call them, they are inherently they are overriding the controls, right? When owner manage a business, right? When one person or two person are in the director board and they put their own money to run the business, they are not thinking about the internal controls of the company. They don't care about the internal control. They may put internal control not to take cash for their personal use, but still by the time they go home at the end of the day, they will open their the drawer and they will take the money and they put into their pocket and go. They are not worried about the internal control. For that sort of clients, we do substantive testing rather than doing the control testing. But for some clients, especially for bank, finance companies, insurance companies, that sort of the regulated and very formal companies, right? Formal entities, basically we follow the control approach. That means we check their control, effectiveness of their control, and depending on that we decide up to what extent we want to rely on the substantive audit procedures. Now what it says in here, if the auditor are to place reliance on the internal controls, that means if auditor is going to do a particular audit depending on the internal control, doing interim audit is the most important thing, because they can gather more information or they can get a lot of audit evidence while they are doing the interim audits, right? So if the auditor obtains audit evidence about the operative effectiveness of the controls at the interim audit, when it comes to the final audit, instead of having given evidence over the controls covering a whole year, the auditor can focus only on obtaining audit evidence about the significant changes to those controls subsequent to the interim period, right? So basically when they do the interim audit, they have checked all the controls. The audit doesn't matter at the end of the year. They don't need to worry about the year-end audit internal controls, because most of the stuffs have been checked by the interim audits. And if there's any internal control change only, they want to look at the end of the period, right? Or else they can determining additional audit evidence to obtain for the remaining period, because most of them have been gathered during the interim audit periods, right? So those are the basics about the audit plan and the audit strategy. So I have taken very small part that is called the audit program, which means audit program in the sense what I have done is, now what we discussed in the today's session is setting this audit strategy and the detailed audit plan, right? When we discussed about the detailed audit plan, we told we want to see in the tutorial we discussed about these the 4 or 3 factors here. 3 factors we discussed what you should include in the audit plan, right? It says the description of nature, time and extent of the plan, risk assessment procedures, and a description and nature, time and extent of the plan, further audit procedures. So this part we have already discussed, right? The plan, risk assessment procedures. Here what we are talking about, plan further audit procedure at assertion levels, right? Audit procedures. What are the things that you need to do for all the areas See, audit procedures for major account areas: inventory, receivable, cash, sales, purchase. For each, what are the things that we are going to check is documented in a detailed audit plan. We call the audit program also, right? See here I have taken a very small simple example to have the detailed audit procedures over the sales. See, objective is to obtain sufficient appropriate audit evidence to ensure whether there are no any material misstatement in completeness, existence. These are the assertions: completeness, existence, accuracy, measurement and presentation of the sales. So to ensure that to ensure the completeness of the sales, to ensure the existence of the sales, to ensure the accuracy of the sales, and to ensure all the disclosures relating to the sales have been disclosed in the financial statements, right? Over the sales, you have to do these kind of audit procedure. Likewise for sales, cost of sales, other administrative expenses, finance expenses, property, plant and equipment, what else, inventories, trade receivable, trade payables. For all the areas, normally we should have this kind of a detailed audit plan. Tell your staff, go there under sales, you want to do these tests and check these things, right? Likewise, detailedly we give them. So basically we can call it as what, a detailed audit plan also. So look at this, a very simple one. This is very simple one. It is not a complicated one. It is not a comprehensive one, right? I'm taking very small one. So when you send your staff, you can tell to your staff, look at this, you are the one who is going to do the sales area, right? So check these things. Go to your client place and check these things. What you ask to check? Test of controls, TOEs. You can do the TOEs, right? TOSD. Evaluate the system of internal control for sale. You want to look at what is the internal control and perform a walkthrough test for the compliance of the procedure for sale. You can do a walkthrough test, and if you want, you can select a sample of say maybe 20 or 50 transactions and check whether everything has been done according to the internal control available to that, and you can conclude yes, they have a good internal control system. Depending on that, I am not going to do the substantive procedures, right? Then substantive analytical process, we discussed there are two types of testings, right? What is the first one we call the test of control is there, the other one is the substantive testing. Under that we discussed substantive testing, you have substantive analytical procedures and test of details, right? So here it talks about the substantive analytical procedures, what you can do. Calculate variance analysis. You want to compare last month, you want to take, we'll say 2018, all the months sale figure. How much is the January sale, how much is the February sale, how much is the March sale, how much is the April sales. Likewise from January to December you are taking the January sales, the 2018 sales. Then you take 2019 year and you take the 2019 year January, February, March, April, May. Likewise you take the sales and you check whether is there any variance. Now say for an example, you can identify. Now say for instance, in Sri Lankan context, April you have the in Sri Lankan now Sinhala and Tamil people, they celebrate the Sinhala what do you call, the Sinhala Hindu New Year. So what happened during that period, if it is a garment, the client that you have and you do the audit for the client in the garment sector, you can see the sales is high. That pattern, that variance analysis you can identify. Now assume when we considering about this coronavirus, what happened now when you do an analysis, last year April there would have more sales, but this year April there would have no sales, right? So in that case you can identify that sort of variances and you can conclude what are the reasons for that variances, right? That is the analytical procedures. And perform a trend analysis. Trend analysis in the sense, the best example is you can do like this sort of a test. Now say for an example, you do a hotel audit, you take the total revenue on monthly basis for a particular audit. You are taking, you can see January sales is this much, February sales is this much, March sales is this much. Likewise you take the sales on the monthly basis and you compare with the industry data. Now say for an example, you can go you can go to the tourism board, the website, Sri Lanka tourism board website, and you can get the detail how about the the number of tourist arrival to Sri Lanka in each month. From European countries, how many people came, and how many foreigners came, and from the Asian sector, how many people came. Likewise, you can gather information about their arrivals, and you can match these two with your organization or your audit client's income. Now, if Sri Lanka has more arrivals on April, May, your company also would have higher occupancy of the, or occupancy in the sense higher guest arrivals to your hotels also in the April and May. Like you can see trend as a trend. What happened? Trend in the industry. What happened to my company? That sort of analysis that you can see. It is a sort of a gathering audit evidence to ensure that your revenue figure is correct, right? Okay, so once you do that, if you are not satisfied about the analytical procedure, you can go for the detailed or substantive procedures also, right? So what you can do, cross-check the closing balance as at 31st March 2019 of the sales in the ledger account with respective amount the trial balance and the financial statement. You are checking whether ledger balance has taken the trial balance figures has taken into the financial statement, right? Why? You want to check the accuracy assertion, you want to check the completeness assertion. Perform a cutoff test beginning and the end of the year for the sales invoices. You want to now simply we do this cutoff test. You're taking the last final or the final invoices raised by your hotel. Now say for an example, if it is a hotel, 31st March is assume that 31st March is the year end. 31st March is the year end. So you compare, you take the last 10 invoices. Now say the last 10 invoices has raised on 30th and 31st March. So last 10 invoices start from, we'll say number 300, 310, 311, 312, 313, 314. That order it comes, all the invoices, right? Serial order follows to the invoices, like 300, 301, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We started 311, right? 311, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 is the last bill we raised for 2018 March. So again, when you start 2019 March, your bill should start from say 300 and if we stop at 320, the next invoice should start from 321. If it is stop at 320, you should start with 321. So that particular revenue have to be accounted in 2019 financial year. Likewise, you are checking whether it has correctly recorded in the correct period. To do that, you call it the cutoff test, right? We call it a cutoff test. Why? The purpose of doing a cutoff test is to check whether the completeness. That means you have recorded the sales in the correct period, right? Then sometimes you can call it cutoff as well, right? Then select sales invoice for a month. Sample, select and check the sales daily book noting the following, right? What do you want to do? You want to pick a sample and you want to check whether daily sales, whether the date is correct, receipt number, amount, description, and whether the receivable is receipt is available. Then once you check that whether it has been recorded in the sales daily book, right? Sales daily book, which we call the prime entry book, whether it's recorded prime entry book correctly, then analyze the sales return not in the following. If there's any sales return, check whether those are correctly done, and check in the advance received as 31st March 2019 and subsequent settlement of the advance. From some clients, you may have received advances. You want to check whether those are exactly existed, right? To check completeness. Sometimes you can call the existence also here. Then vouch sale for the selected sample of noting. You can select a sample of sales vouchers and you can check whether the date, receipt number, customer number, test description, and the amount and the availability of the receipt. These are the earlier we did what? We check whether those are correctly recorded in the prime entry book. Here we are checking whether those are recorded correctly in the general ledger. perform a logic test for VAT and NBT expenses, whether when we apply 12, the current VAT rate is 8%, so when we apply the 8%, whether it's correctly recorded the accurate the amount of the VAT NBT recognized, and vouched VAT expenses payment recognized during the period, right? And disclosures, check the presentation and disclosures related to the sales in accordance with Sri Lanka accounting has been done in the financial statement. Likewise, in detail we can give this. That's what I told. This is not a complicated one. This is not a very comprehensive one. This is a very small one which I prepared for your purpose. This is a sort of a detailed audit planning that you can do, right? So hope that you got an idea about basic about the audit planning and the audit strategy, basically audit strategy and the audit plan, what sort of things that you should include and what you have to consider when you're determining an audit plan for your audit, right? So that is comes under the audit planning. Thank you very much, Danny.